Hello everyone, my name is Brett Selke, and today I will be pitching Solana. Solana utilizes a hybrid proof-of-stake and proof-of-history verification system and is officially defined as a web-scale blockchain. However, it closely resembles a Layer 1 blockchain. It is open source and supports both smart contracts and decentralized applications. Solana provides a solution to a problem that had bottlenecked Ethereum and other Layer 1 blockchain scalability, with advancements in throughput, finality, and cost. Solana was developed by Anatoly Yakovenko in 2017 and launched in March 2020 under the company Solana Labs. The issue with Layer 1 blockchain networks like Ethereum and Cardano is the bottlenecked throughput and finality, which is prohibiting their ecosystem participants from growing. The bottlenecks have caused congestion in the network, increasing the power requirements to process transactions. The energy output is passed on to users in the form of gas fees. Ethereum's gas fees have averaged roughly $37.19 per transaction. In contrast, Solana's gas fees have averaged roughly less than a cent per transaction. Furthermore, Solana's verification system only requires 1,837 joules of energy per transaction. Ethereum 2.0 is theorized to require 126,000 joules at best, an increase of 6,000% relative to Solana. Although Layer 1 blockchains are turning to sharding to increase throughput, it is not marginally beneficial relative to Solana's 350,000 current transactions per second. In the long run, participants within Solana's ecosystem will have the opportunity to scale more than its peers due to its infrastructure and low cost. It is recommended that Solana be brought at a price target of $261.34, representing a 37.11% upside. To reach an intrinsic value for Solana, 7 models were used and weighted 60, 19.5, 19.5, 0.25, 0.25, 0.25, 0.25 to yield a 37.11% upside on the current price of Solana. The models were chosen to represent 3 aspects of Solana: its free cash flow, its competitive positioning, and its intellectual property. First, a 5-year DCF model was constructed to model revenue from transaction fees, using a long-term growth rate of 26.2% and a WACC of 28.1%, an intrinsic value of $0 was reached. Then a project multiple was calculated using a pure average of 1,385.9, resulting in a downside of 64%. Additionally, a year-over-year project growth multiple was calculated using a pure average of 281%, resulting in an upside of 36%. A present max transaction per second multiple was also calculated using a pure average of 1,635.4, resulting in an upside of 21,301%. Subsequently, a theoretical max transaction per second multiple was calculated using a pure average of 480,000, resulting in an upside of 48%. A finality multiple was calculated using a pure average of 222.7, resulting in an upside of 1,613%. Lastly, a last 12 months transaction multiple was calculated using a pure average of 222, resulting in an upside of 18,103%. Proof of history is the unique consensus mechanism that is responsible for Solana scalability. It utilizes a timestamp procedure in tandem with its SHA-256 hash function that creates a cryptographic clock within the blockchain. This differs greatly from proof-of-stake consensus mechanisms that have historically been energy-intensive and time-consuming when validating a transaction. Proof of history allows Solana to have both a higher transaction per second and lower energy output per transaction compared to its peers. Proof of replication is used to complement proof of history and to provide additional security to the network. Proof of replication is not used as a consensus mechanism. At a theoretical maximum transaction per second, Solana will generate 4 petabytes of data a year, which can become problematic if validators lack the hardware to manage the data and thereby centralizing data to a select few validators. Proof of replication allows the ledger to be distributed to archivers to save. Archivers are members within the network that are not consensus participants, but who are rewarded for saving data to be replicated. Other innovations Solana utilizes throughout its network is its Turbine protocol, Sea-level protocol, and Cloud-break architecture. The Turbine protocol allows Solana to circumvent bandwidth limitations by allowing nodes to stream portions of data amongst themselves at a lower block size. The Sea-level protocol optimizes validator hardware to run Solana's parallel smart contracts, thereby responsible for Solana's transaction speed. Lastly, the Cloud-break architecture is responsible for Solana's proof-of-history, proof-of-stake hybrid system, which can scale more efficiently than sharding. The Cloud-break architecture leverages specific hardware capabilities combined with a unique database to remove operational bottlenecks and further scale. Below is an infographic of some of the most popular members of the Solana ecosystem. There are 6 industries to scale within Solana: social media, metaverse, audio, gaming, NFTs, and DeFi. Ecosystem continued. Social media has historically operated under central authorities such as Meta and Twitter. Reddit co-founder Alexis Ohanian has invested $50 million into creating a decentralized social media platform on the Solana blockchain. The Grape protocol and Twitch are Web 3.0 decentralized applications with a first-mover advantage in the space. They focus on giving power back to users by safeguarding their data and removing intermediaries from transactions. Metaverse. Decentralized applications such as RNDR are bridging the gap between Web 2 and Web 3 by decentralizing the platform's GPU rendering. Previously, RNDR rendered animations for HBO, Netflix, and Disney. Other decentralized applications like Jesse are working on the metaverse property development by providing architectural tools. Audio streaming platforms such as Spotify have historically taken autonomy and profit away from musical artists. Audius is utilizing Solana's low cost and high transaction per second to build a blockchain that pays artists immediately once someone listens to their song. It has been funded by musical artists such as Katy Perry, Steve Aoki, Jason Derulo, and more. Gaming is expected to grow at a CAGR of 12% until 2025 due to blockchain adoption and integration. Solchicks, a fantasy player-versus-player ecosystem about chicks on Solana, has already experienced funding from 113 venture capital firms. Solana's transaction speed and finality is attractive to game developers seeking to build fast-paced action games. NFT sales have propelled Solana to become the 4th largest NFT platform in only 20 months, according to Mizari. There are currently over 190 NFT projects on the platform, the most popular being the Degenerate Ape Academy and Ori. Solana partnered with FTX to allow Solana NFTs to be minted, traded, and held for auction. The partnership is expected to drive Solana's NFT sales and grow Solana's market share. DeFi projects are expected to be the leading driver behind Solana's future transaction growth, as Solana's transaction per second and costs are lucrative for decentralized exchanges. Solana partnered with Alameda Research, a quant trading firm, and FTX to create Serum DEX. It is the only DEX that has a fully on-chain central limit order book. Serum's transaction finality is less than a second, and the gas fee is lower than Solana's. Other notable DeFi projects within the ecosystem include Mango, a cross-margin trading platform, HoneyDAO, a decentralized venture capital company, and Marinade Finance, a liquid staking protocol. Electricity. Solana's hybrid proof-of-history and proof-of-stake protocol is energy efficient. This model allows Solana to use 1.837 thousand joules per transaction, far less energy intensive relative to its peers. For instance, a single Ethereum 2.0 transaction currently required 126,000 joules. Similarly, a single Bitcoin transaction requires 6.996 billion joules of energy. However, due to its low transaction fees, Solana had been burning electricity at a loss. An increase in electricity prices over time, regardless of geographic location, possesses an extreme risk for the network. Security. Network security is handled by both the proof-of-history generator and validators. The proof of history generator keeps the validators honest by occasionally injecting an invalid hash. Any validators who voted for the invalid data are subsequently slashed. For an attacker to bypass a proof of history and proof of replication system, they would need to utilize a faster processor than the network and pre-compute future sequences of data before said data is input into the sequence. Theoretically, assuming the hash function continues to remain collision resistant, it is computationally impossible to attack the network in this manner. Governance. The Solana Foundation and Solana Labs will determine the development direction of Solana. A supermajority voting system is utilized, weighing the user's stake among the network. Its proof of replication archivers serve to prevent any validators from getting too much power due to hardware limitations. In 2017, Anatoly Yakovenko published the white paper, Solana, a New Architecture for a High-Performance Blockchain, detailing the theoretical applications of a proof-of-history blockchain. Prior to releasing the white paper, he had over 15 years of software engineering experience shared amongst firms such as Qualcomm, Dropbox, and various startups. Following the publication of the white paper, he founded Solana Labs with co-founder Greg Fitzgerald and Raj Gokul, both of whom have an extensive history of developing operating systems utilizing a range of computing languages. Solana Labs transferred all intellectual property and a majority of SOL to Solana Foundation as of 2020. Going forward, the Solana Foundation will be running the project while Solana Labs is phased out. Free cash flow will be negative perpetually at the current transaction fee, with today's electricity cost. Solana's current strategy is to undercut other Layer 1 competitors to create sticky users and gain market share. This strategy has been effectively utilized by businesses such as Amazon and Walmart. In the future, Solana will have to raise fees in order to offset electricity prices and generate a profit. Hardware requirements to become a validator for Solana are amongst the strictest in the industry. Specific hardware global shortages will bottleneck Solana from increasing their validator count. Validators are needed to continue Solana in the long run, and a decline presents a threat to Solana's network operations. Additionally, due to the hybrid proof-of-history proof-of-stake system, Solana is vulnerable to unique proof-of-history operating issues such as the DOS attack on September 14th. Quantum computing has been theorized to be able to shred cryptography, rendering cryptocurrency obsolete. Although some peers have announced plans to make their blockchains quantum resistant, Solana's management has not. However, a security audit revealed 10 million qubits are required to break Solana. IonQ, a leading quantum computing company, possesses the capacity for 32 qubits today. Thank you. Please direct questions to brett.selke@marquette.edu. And a special thank you to the Marquette Crypto team, consisting of Dr. Wall, Ed Eisenhower, Christian Wilbur, Graham, Rishi, Elise, Professor Walker, and Dr. Krause.